Hello everyone, Ugodre here, and this is my money brief. On today's money brief, I want to talk about capital importation. Why does that matter? Nigeria just received, or the National Bureau of Statistics announced that Nigeria received a whopping $5.6 billion in capital imports into the country. Why is this important? Why does anyone even bother about it? Why is this such a big deal? Well, let's talk about it. Capital importation basically is a data that the NBS often releases every quarter, and it captures the amount of foreign investments that Nigeria has attracted at any quarter during the year. They do capture it in quarterly basis, Q1, Q2, Q3, Q4. And it gives us a sense of how much investments Nigeria is attracting or how much foreign investors are bringing into this country. Now, you do want foreign investors into the country because when foreign investors pour dollars into your country, your exchange rate tends to be pretty stable. See, that's the important part. So the less foreign investments you get into your country, then the more volatile your exchange rate can be. So there is a huge correlation between foreign investments into your country and a stable exchange rate. And so for the first quarter of 2025, Nigeria attracted $5.6 billion in foreign investments. So let's compare this to previous quarters. So if you go to the first quarter of 2024, so we're looking at previous first quarters of the year, we did $3.3 billion in the first quarter of 2024. Now, if you go to the first quarter of 2023, we did $1.1 billion. Now, if you go to the first quarter of 2022, we did $1.5 billion. And then you go to the first quarter of 2021, it was $1.9 billion. And if you go to the first quarter of 2020, it was $5.8 billion. So the last time we did over $5 billion was in the first quarter of 2020. What does that remind you of? The first quarter of 2020 was the quarter before COVID-19, before the entire world went into a lockdown. And that was around the last time we had an exchange rate below 400 Naira to the dollar. Since then, the exchange rate has basically nosedived. And so capital importation is very important for any economy, especially for emerging markets like Nigeria. And so the fact that we're seeing capital importation at $5.6 billion in the first quarter of this year perhaps explains why the exchange rate has been stable over the last few months. But what really is inside this capital importation? So the data that the NBS captures divides capital importation into several subsections. But there are two major sections, and that is foreign direct investments and foreign portfolio investments. So foreign direct investments is actually the one that we all love because that is money that comes into your country and just hardly leaves. Like it's right in there. So it's that money that investors bring in either to set up companies in Nigeria or to invest in plant and machinery or to invest in assets in Nigeria, like real assets that are generating money. And that is one area that we haven't actually been doing well. So what does the data say with foreign direct investment into Nigeria? We're going to look at this annually now. In 2024, the whole of 2024, Nigeria was only able to generate $674 million in foreign direct investments. Now, if you go to 2023, it was even worse at $377 million. Now, you go to 2022, $468 million. You go to 2021, $698 million. And then you go to 2020, that same COVID year, it was $1 billion. And you go to 2019, it was $934 million. And you go to 2018, I beg your pardon, it was $1.1 billion. So capital importation on base on foreign direct investments, that's the real one that we want, actually been doing very poorly over the last 6, 7, 8 years. And I cannot recall when we've done $2 billion. I'm going all the way, even 2015, which many would say, look, was one of the best years, was about $1.4 billion. But the highest that we've ever seen was in 2014. And that was actually when MBS really started capturing this data, because we don't have this data beyond 2014 officially. And at that year, it was $2.2 billion. So that's the highest that we've ever seen from foreign direct investments. Now, the second part of capital imputation is foreign portfolio investments. And that is what a lot of people like to call hot money, because it's money that really never stays. So it's money that essentially goes into buying stocks or buying bonds, either bonds sold by the federal government or bonds sold by companies, or into the money market like treasury bills and other short-dated securities like commercial papers. And then to a small extent, investments in other forms of credit to the government or to banks. So we tend to call that hot money because that money never really stays. So when it comes in, it does leave it as well, because investors just bring that money in for short-term returns, and they can easily just cycle that funds out of the country as well. But we still do need it because it creates the sort of liquidity that we want into an economy. But here's what's very important about foreign portfolio investments. If foreign portfolio investments have a lot more going into equities, then our stock market tends to do pretty well because it creates the sort of demand that we want. But if the foreign portfolio investments goes a lot more towards debt, then that could also mean something else. For example, it could mean that your country is borrowing a lot more in foreign currency, or it could mean that the country is borrowing as a way of stabilizing the exchange rate. Critics will say it's a way of defending the Naira or defending the currency. But the official word for that is you're basically attracting foreign inflows so that you can have a stable exchange rate and get volatility out of the way. So how have we been attracting money in the foreign portfolio investment space? So let us see. So we go back to 2014. We were doing $4.9 billion in foreign portfolio investments and $413 million in other investments, not the very serious ones. But if you look at the breakdown of the foreign portfolio investments, as at 2014, $3.8 billion of that was going into equities out of the $4.9 billion. The rest were going into debt. So it means foreign portfolio investors who were coming into Nigeria were buying more of Nigerian stocks. It was like that as well in 2015, with about $6 billion coming into foreign portfolio investments. 4.6 billion of that was going into, equities. And then the rest was going into loans and debt instruments to government and the private sector. But things started going south in 2016 when we really had that very first oil price crash, if you all remember. And then foreign portfolio investment crashed to $1.8 billion. But other investments, the other side of foreign portfolio investments, still went on, and it was $2.2 billion at that time. Most of it, of course, was loans to the government, like Eurobonds. And it went on and kept nosediving. And then in 2018, we saw a surge again when we had policies from the CBN that encouraged foreign investors to bring in money into the country as foreign portfolio investments in exchange for high interest rates. And in 2018, foreign portfolio investments jumped to $11.8 billion. That's one of the highest that I've ever seen. Of course, that was topped 2019 by $16.3 billion, the highest to date. We haven't seen foreign portfolio investment get anywhere close to that since then. Now, if you look at that number, and here's where it gets interesting. Of that $16.3 billion that came in 2019, $13.4 billion of that money was in money market instruments. So what are money market instruments? Like I mentioned earlier, there's the treasury bills, OMO bills, very short-term instruments. And the whole idea of money market instruments is you get foreign investors to bring in dollars in exchange for really high interest rates. So think about it. A foreign investor living in the US or in the UK basically borrows money from their bank. They could borrow maybe $1 billion from their bank at 1% interest rate. And they come into Nigeria, lend it to maybe the central bank or to Nigerian banks at 20% interest rates. And they keep that money here. And then after like a year, they can take their money out. Of course, it does come with some risk. But for us, it creates the liquidity that we need to keep our exchange rate kind of stable. So that is why it often comes at a very high cost. And if you fast forward to 2024, foreign portfolio investments into the country in 2024 was $8.3 billion. Now, this was actually quite outstanding because in 2023, it was $1.1 billion. And in 2022, it was $2.4 billion. And then in 2021, it was $3.3 billion. So it had been dropping since 2014 because we stopped that policy of giving foreign investors high interest rates. And so what did they do? They basically took that hot money out of the country. But in 2023, 2024, when we changed our FX policy, the central bank, as part of its core strategy, started increasing interest rates. And it kind of made sense at the time because inflation numbers were also skyrocketing. And so to keep rates at the same pace with inflation, they increased their interest rates. And so at some point in Nigeria, you could get as much as 29% if you're investing in the money market. And so what happened? Foreign investors started pouring in dollars into the country again. And so by the end of 2024, we saw the figure at $8.3 billion, the highest that we have seen since probably 2019 or maybe 2020. In fact, 2019, because we hadn't seen anything close to that since 2019. $8.8 billion. And this has continued into 2025 because the first quarter of the year, we've seen $5.2 billion already. So could be that this might be that year where we see foreign portfolio investments at over $20 billion. So that essentially is capital importation, how much comes in this country and where they go to. So again, it goes into foreign direct investment, it goes into foreign portfolio investment, and it goes into other investment, which essentially is just loans. And so most of the foreign investments that Nigeria attracts essentially goes into loans or equities, which you would call hot money. So 10% or less goes into foreign direct investments. So even all the money that our startups raise, right? When you hear startups have raised $100 million, $50 million, a lot of that money doesn't really come into Nigeria. It stays outside in foreign currency or foreign accounts. But there's a school of thought that thinks, hey, you know what? Maybe we really need to look at how we capture those things because that money, funnily enough, finds its way in. It's just that it doesn't come in through the official channels. So think about it. I'm a startup founder and I raise $1 million. I probably put that money in my Delaware account in the US. But I do need to spend that money here. So what do? So I look for somebody who's going to buy $100,000 over there in the US and give me the Naira equivalent here in Nigeria. So in a way, that money still gets spent here, but we don't really receive that cash flow into the country. So that is why it is often not captured in the capital importation numbers that you have here. So one other thing that I should, give you as well as information. That is probably why you see most capital importation into Nigeria going into certain states and not all states, because some of the states don't have any business with money market instruments or bonds or equities. And so that's why most capital imports into Nigeria either comes through Abuja or through Lagos, because that is basically the headquarters of government and commercial or private businesses, respectively, in Nigeria. And so when you see capital importation numbers zero for a lot of states, it's because they are not attracting foreign direct investments significantly enough, because as a country, we're not even doing close to 10%. So you're not going to expect a lot of states to have foreign investments coming into their states at the moment, which is pretty bad. So most of this capital goes into Lagos and Abuja, because that is the political capital of the country and the commercial capital of the country as well. And it also speaks to how or why there are just 3 banks that basically dominate capital inflow into the country. And those banks are Standard Chartered, Citibank, and Stanbic IBTC. Stanbic IBTC is a member of the Standard Bank Group, one of the largest banks in Africa, based in South Africa, even though they operate here in Nigeria as Stanbic IBTC. And so most Pan-African inflows, or most inflows in emerging markets, come through that bank. Standard Chartered, of course, has affiliations with Europe. And so most European investors will typically use Standard Chartered as their bank. And of course, the US, which is also where we get most of our capital inflows, also goes through Citibank, which, of course, has affiliations with the US. And so it's going to be very hard to see a whole lot of other banks play actively in this sector. The only time you see Nigerian local banks play in the sector is if they are the ones attracting the capital inflows themselves. I'm not saying they don't play, but not at a significant level. Within these 3 banks, you probably have like 70-80% of the total capital inflows into this country. All right, so that is capital inflows and capital importation, or as we like to call it, capital importation into Nigeria and what it means. I hope that I've been able to explain this. Of course, feel free to ask more questions in our Money Brief. And until we do this again next time, do have a profitable day ahead. Bye.